Okay, welcome. Thanks again, everyone, for joining. I'm so glad that this is going well and that people enjoy it. Real quick update. I'll give you a firm update quickly, which is interesting. The conversation that we started having this week is, in fact, how to bring people back to Gilman Hill. And I just thought you would think that was interesting in the bigger context of, what the world's thinking of and how that's starting to work. So one of the ideas that we're toying with is starting on May 15th, bringing like one person back, maybe Michelle back to work 2 days, Monday and Tuesday, someone else to work Wednesday, and then Greg finally gets to return. He's dying at home, but and then maybe Greg on Friday, and then that way in our 2,500 square foot office, for the first 2 weeks there would be only 3 people with like very strict protocols around wiping everything down, Lysol wipes everywhere, and all of that. But it would be nice. And then after that, after June 1st, then increasing that to 4 people with a little bit of overlap so that people start to see each other. We're not sure that this is what we're going to stick with, but it seems to be in line with the guidance that's coming out, and it seems to be the right decision for us. We can, as you all know, work quite seamlessly from home, but we miss each other, and it's really nice to be able to at least start to have the conversation about coming back. So that's that for us. I hope you are all well and healthy and safe, and that your families are too. It's a wild time. So with that, I think we'll jump into headlines, and I'm going to let a headline since last week, and I'm going to have Greg kick that off with talk about new cases and GDP. There's been a ton of information that's come out in the past week, and it is so helpful. I was just on CNBC this afternoon earlier, and one of the things that they were talking about is that the market's trading on hope. We all know the market, well, at least our portfolios are up a lot in the last week. And I argued, I don't think that the move up that we've had in the last week and a half or two, I don't think it's hope. I think it's clarity. And that's what we've had. We've had increasing clarity. We don't have great clarity, but we have increasing clarity from information that's come out. And that's come out from an economic perspective, as well as from at the company level, as companies have been reporting. So with that, I'm going to turn it over to Greg for the updates on what's happened since we spoke to you last week.
There's a lot of news in the last week. The first, on the economic front, we got the first reading on first quarter GDP today, which was GDP was down 4.8% in the first quarter, which is, as we've been saying with most economic data, it's shocking, but not surprising. It's a little bit worse than expected. The consensus was down 4%, so it was down 4.8%, not too far off. I think most people are, first quarter is behind us, and they're more concerned about the second quarter and how the progression throughout the rest of the year. So a little bit of a shortfall there is, I think, insignificant. And as we can see from the market today, the market doesn't really care today. There's other things that are, I think, more important.
And I want to bring up one point on that too. I think it was in the note that we put out. It was either everything's all mushed up right now. It's either in the note that we put out last week or the quarterly letter that we wrote, where we talked about, we've seen in the last month, we've seen estimates for our expectations of GDP ranging from between down 10% and down 50%. So that gap has been incredibly wide. So actually having a concrete number and some idea of what's really going on, even though it is a terrible number, is just useful. Okay, sorry. Go ahead, Greg.
On the policy front, the Fed is meeting today. Right now, I just see the headline coming across that they're pledging to keep interest rates near zero until we have full employment and inflation coming back, which is not surprising at all. I think everyone kind of expected that, but it's nice to see them reiterate that they will continue to support the economy as long as necessary. On the fiscal front, the president last week, I think when we spoke last week, the Senate had approved the latest round of coronavirus funding that passed the House, and the president signed it, I think, last Thursday. It's $500 billion of additional funding for small businesses and hospitals. So that's behind us, and the market will start to look forward to the next piece of legislation. With there's plenty of rumors about what needs to be done next, but at least that part of the funding is behind them. As far as testing, we've been saying that testing is the key to living with this virus and keeping it under control. We got some positive news in the past week. Testing had plateaued at about 1 million tests per week, but over the past week, we actually had 1.6 million tests for the coronavirus. This also coincides with Trump coming out and saying he's promising that we'll be able to run 5 million tests by early June and 20 million by July. Well, we think he's being way too optimistic, but it is nice to see that the number of tests is going up after plateauing for a while. We continue to see the number of cases of the virus declining nationwide. Now, the cases are declining at a slow rate, but it is encouraging to see that the numbers are coming down, especially while there's a significant increase in testing over the last week. Most of the decline, though, is still coming from New York and the tri-state area. New York is leading the decline. They've got the number of patients entering hospitals in New York are now down 70% from the peak. So a major improvement in one of the biggest hotspots in the world. But I think we'd like to see better data from around the country, the rest of the country. Around the world, Europe still, the virus continues to decline. Most major economies there are seeing the number of new cases down between 60 and 80% from the peak. So there's encouraging news out of Europe as well. And they're about 2 weeks ahead of us in terms of the progression of the virus. So the talk this week has turned to reopening the economy, what states will do it, and what that will look like. Many states will have their stay-at-home orders expire tomorrow. And some have officially come out and said that they're not going to renew them. Businesses should plan to reopen. Other states are either have a May 15th stay-at-home order or are planning to extend it further. But at least those states are also laying out plans on how they plan to reopen. But it may be at a later date than the initial states. I think the biggest one is Texas is reopening most of their businesses. Florida has plans to reopen a significant amount of their businesses. But then states like New York, it's a little bit more of a measured approach where they're going to start with manufacturing and construction in the regions that haven't been hit as hard as with the virus. So each state will be very different, but I think the main conclusion is April's probably the bottom in economic activity, and we'll see May should be better than April. Still will be a big decline from where we were earlier in the year, but there should be some positive momentum going forward. We've seen some good economic research on the impact of the virus, and Goldman is highlighting that they believe that economic activity was down about 15 to 20% from the peak in April. So that's the low point, is down 15 to 20%, and we should see a gradual improvement as long as the virus doesn't come back in an accelerated manner. We're watching Europe closely. Europe has been reopening their economy for the last about 2 weeks. Even though they've been reopening the economy, we have seen a lot of caution amongst people, that people are not eager to return to retail outlets. And while that's not great for the economy, that is good for the controlling of the virus. Because I think there's a lot of fear out there that once we reopen the economy, people will return to the same behaviors that they had in January and February, which caused the acceleration of the virus. But that doesn't seem to be the case. Early reports out of Florida and Texas is that people are very cautious there as well. So that I think is positive news.
Right.
And then the big news of the day is news on a treatment. So the market is up a lot today, as I'm sure many of you have seen. The news is being driven by...
No, Greg, they haven't seen it because they're all long-term investors and they only check their portfolios every quarter. Just kidding.
Good. So the big news today is on Gilead's drug Remdesivir, which we had some hints of positive data in previous weeks, but this is there's a study that's being run by the NIAID, which is the National Institute of asthma and infectious diseases. So the study, Dr. Fauci was out in a press conference leaking some of the data from the study, and the drug was a pretty wide study with a placebo group. He's saying that the recovery time with taking remdesivir was 11 days versus 15 days for the placebo group. There was a small improvement in the mortality rate as well, but not statistically significant. It's not a huge improvement, but the likely action is that many people believe that there'll be an emergency use authorization from the FDA in response to this data. It's an effective treatment, but I think we would caution everyone that this is definitely not a cure. But Dr. Fauci, he's optimistic that he thinks this is the beginning of better treatments coming along for the virus, and that even better ones are in the pipeline, but that at least something is effective, and it is a positive that the patient results are improving.
Right.
And then on earnings, we're getting a ton of earnings from companies, and we're learning a lot. I think we're getting a lot more clarity on what the economy looks like with the shutdowns across the country. And I think we'll just highlight two of the companies that reported last night, which we don't own.
Yeah, these to us are total bellwethers, things that really help us understand, what's going on. So anyway, go ahead, sorry.
But I think Google highlights how some parts of the economy are doing really well. They reported revenues in the first quarter, even with all the disruption, their revenues were up 13% for the quarter, and they had net income of nearly $7 billion. Despite all the shutdowns in their businesses, they have several businesses that are benefiting, and a lot of those benefits are outweighing the negative impact of less spending on advertising. So they're doing well. Starbucks is the opposite of Google in that they're being disrupted heavily by the shutdowns due to the virus. They're impacted by the closures of their stores, and they report even with all the closures in China and Europe and the US, their revenue was only down 5% last quarter. It's going to be a lot worse this quarter, but they did have some positive comments in that China is slowly recovering. In the US, even though things are pretty bad right now, they expect 90% of their locations, of their stores to be open by early June. So they are seeing some hope. I think that's the general theme we're seeing is a combination of companies that are doing fine despite the virus, and then other companies that are being hit pretty hard by the virus, but most of them are saying that the worst is over and things are starting to gradually improve, and there's reason for optimism in the future. Right. Did I miss anything? There's a lot to cover.
You nailed it. So we've gotten so organized, so now we keep really precise notes so that we stay on track. I think from there, I'm going to answer, rather than saving this for the end, I'm going to answer the biggest question that I've been getting in the last week and a half or so, which is, oh, sorry, I'm going to pin my video too. The biggest question that I've been getting in the last week and a half, or the most recurring question, has been if there's going to be a double dip. And by double dip, I mean, is there going to be a major resurgence of this virus in the fall? And is it going to be worse and create a depression, and really be horrible? I think there probably is going to be a resurgence of the virus in the fall. That seems to be in the cards. And one of the things that I've heard being discussed is, do places start school earlier? Do they start school in August or July even? So with the expectation that kids may need to go home in the fall. But I think, well, there probably will be a resurgence of the virus in the fall. I think the response when we get there is going to be very, very, very different. So I think as we think about the word double dip or another round of this, we need to be very aware of the fact that it's not going to be the same way it was this time, right? By then we will probably have better treatments like this remdesivir that's coming out. Hospitals are already planning to spend the summer preparing for that. Now they know how to handle it. They know that they know what they need in terms of ventilators or not. They know what they need in terms of medication, in terms of staffing. Schools, as I mentioned, are going to have preparedness and plan. Businesses, it's not going to be us deciding on a Friday, geez, we need to shut down, and we don't know if it's going to be for 2 weeks or 2 months. That'll all be in place. we're all going to know what those symptoms look like a lot earlier. There will be better tracking. It may not be perfect, but there will be better tracking and recognition of what the virus looks like. So it won't be people sitting in clinics as they were as recently as mid-March, thinking that they just had a cold. And I don't think that gloves and masks are going to disappear by the fall. So even if we get this resurgence, which we probably will, I think that the damage that it will cause, both from a societal perspective as well as from an economic damage perspective, will not be a do-over of what we've just experienced now. So with that one big question out of the way, I'm going to jump into the portfolio. As many of you might have noticed, it's been a monstrously huge week, just Monday, Tuesday, and now Wednesday of this week. And one of the big things that's gone on this week is that we have significantly started to outperform the S&P 500. And I read an interesting research report this morning by a strategist who is actually recommending that people right now, if you want to make a ton of money, you want to get into the epicenter stocks, right? You want to go to the epicenter. The epicenter, as he would describe it, are those that were most impacted. So for our portfolio, that would have been the Six Flags and the Ryman, and and Ryman Hospitality, which is the giant conference center, or Marriott in the growth portfolio. He's also referring to the airlines, things like that. I'm not sure, we're not traders. That's not what we do. We're not going to just start buying these for a play. But the point of highlighting them is the action that we've seen in the market over the last 3 days is that there is the realization that is coming in fast and furious that these companies are not closing. They are not going bankrupt. They might reopen this year. There will still be revenues to be had. And as a result, we've seen their share prices up 10 and 15 and 12% in like big chunky increments for the past few days. I think I don't see why that shouldn't continue for a while, because while they're up these big numbers, don't forget they were down big numbers too. But it is nice to see the performance gap start to close a little bit. With respect to the equity income strategy, this is as of last night, so it's more now, but since the end of the quarter and when I had to send out quarterly reviews, we're up about 14%. Since then, the S&P is up about 11%. And the Russell 2000, which is that smaller cap index, which is a broader measure of, I think, the world, the world as we know it, and Main Street, that's up more in line with us, up about 14% also. With respect to our portfolio, we've seen a lot of really good stuff in the last week, which is interesting. And again, this comes from the earnings calls. So here's who's reported since we last spoke. Kinder Morgan and Enterprise, Umpqua, which is one of the regional banks, Verizon, and Pfizer. All of those companies have reaffirmed the dividend and the ability to pay it and the safety of it. So that's been quite reassuring. The only company they did not report last week, but the only company that cut was General Motors. And that was entirely, completely anticipated. They could not, even though they have the cash on the balance sheet, and if they'd really buckled down and dug in, they could have continued to pay us. The societal pressure to not pay dividends from a big headline, frontline kind of company like that, where workers have been furloughed, there's no way that they could have held up to that. So they did suspend the dividend. I'm sure they'll bring it back. But at that, the thing about that is the stock's actually up a ton. I think we're up close to 12% since that was announced. It was, these days all mushed together. So I said last week, but I think it was actually on Monday when it was actually announced. So that was totally, completely expected and has been on our list where we knew that was happening. And the reason we held it ahead of that was that what we've seen is where this is expected, the stocks are rallying afterwards. So we'll get out of it, but we get to do it at a much better price right now. We've been continuing, you've probably seen a lot of trades in your portfolios. We've been continuing to concentrate the portfolio. So stepping out of Ford, stepping out of Covanta, starting to pick off General Motors, and increasing positions in the ones where we know that dividend's safe. And we think there's significant upside on the share price from here. So Navient, Umpqua, Energy Transfer, Kinder Morgan, Enterprise, we're just continuing to concentrate there. A quick aside, I think two people on this call, two, have recommended insurance companies to me and said, one said, have you looked at Prudential? And one said, have you looked at Principal Financial? And interestingly, whenever anyone recommends, and one said Fidelity National. So 3 insurance companies and different kinds of insurance for each. But as a result, we have been doing a pretty deep dive on insurance. And so we start with those 3 and we start to look at them and we look at the whole peer universe. And what's interesting is at this point, there is a different insurance company that's not any of those three, but that's actually rising to the top of what might be interesting to us. So, this is my way of saying thank you all for the ideas. They're all on our screen, all three that were mentioned. And then we look at each one and we try to figure out what's what's the mix of their business. Do they have property and casualty? Are they title insurance? Is it long-term care insurance? How much stock market exposure do they have? One of the companies, Prudential, for example, actually has 25% of their business in the annuity space, and another 21% has stock market risk to it. So something like that starts to actually move down this, down the, I don't know, level of compellingness for us, because we don't want to compound the market risk. But that's some of the work that's been going on now. And then I should say, actually, one of the other clients who's on the call right now is in the insurance business. So he's been incredibly helpful as my personal consultant in starting to weed through really like the inside look at these companies. So it's been really great. And I thank you all for that back and forth. We are continuing to work on the usual that I keep coming up with, UPS, 3M, blah, blah, blah. But we're going to need a market pullback, like really significant pullback, to make those prices compelling. And thank goodness we didn't buy them when we did. We would have left so much on the table in terms of upside from what we would have had to sell to buy those. So that's useful. And I think that's about it for real highlights in the equity income portfolio. So I'm going to turn it over to Greg for a couple minutes, and then we'll go to questions. And someone emailed me questions already, so I've got questions teed up. Okay, so Greg, you want to go into your portfolios?
Yeah, just touch on it quickly. There hasn't been a lot of earnings or news on the holdings in the portfolio. As far as the international portfolio, we're up about 4.5% since the end of last quarter. That's before today. Today we're up. Portfolio's up nicely. In addition to that, Q3 yesterday was up 4.5%. Not a lot of earnings in the portfolio, though. No dividend cuts. We've had a couple of companies reaffirm the dividend as expected. The international stocks have lagged the U.S. so far this quarter in the initial rebound in the market. Not surprising, that does tend to happen in a rebound, that investor sentiment seems to have moved up quicker in the U.S. and we would expect that eventually it will spill over into international markets, as they're going to benefit from the same exact trends. As far as the growth portfolio, we're up through yesterday almost 13.5% quarter to date. So a strong rebound in the companies there. Not a lot of earnings in the last week. Most of our companies will report this week. This will be a very busy week. But the companies reporting so far have been encouraging, been able to maintain positive free cash flow, despite the disruptions due to the virus. We'll learn more next week. And that's it for my portfolios. Want to address some questions?
Yes. Okay. So with that, hold on. I just need to see if I had any deep conclusions. I did have a deep conclusion before I went to this. But with that, I keep coming back to this thought that, yes, the S&P is only down about 11%, and that is disconnected from the economic devastation that we are witnessing. And we need to remember that the market is much bigger than just the S&P 500. So to give that reminder of perspective, the Russell is still down. The Russell, which is the small cap one index, that's still down about 22%, and the equal weighted S&P 500 that doesn't weight just to the huge FANG, Facebook, Amazon, Apple, Netflix, Google, that's down 16.8. In fact, another client who's on this call, everyone's very participatory, it's awesome, who has a background in really, really high-end asset allocation, reminded me that I believe it was just those four stocks, Amazon, Apple, Google, Netflix, Microsoft, I think it was, that handful of companies makes up 17.6% of the S&P 500. So there's your fun fact for the day. It's a really astonishing amount each and every time I hear it. So the question is the move that we've had rational? Being down only 11 or 22%, whichever index you want to use, is that rational? I think down 22%, or between 20 and 30, I think that if we say that that's where the broader market is, I think that probably is rational. So I'm not nervous at this point about another major retracement. I don't think we're going to revisit past lows. I don't know when we get back to previous highs. I do not know if that's 6 months, 12 months, or 18 months. I do know that we'll get there. I know I say this every week, but I'd be a fool to bet against that. Throughout the history of the market, we always get past a crisis, revisit past highs, and return to growth. I just don't know the time frame. Okay, so with that, questions. John emailed and he said, not John, my husband, client John. Why did we buy more KMI? That was in his portfolio. So you probably either saw increases in Kinder Morgan or Energy Transfer or Enterprise, depending on what your weighting was. Why did we buy more of an oil stock in KMI? And then also, why buy the same stocks in our portfolio at higher prices than last paid? So this is my beef. In fact, I even tweeted this just about an hour ago, not in response to this question, but that it's making me psycho nuts that the energy sector, the energy stocks, that Kinder Morgan is constantly considered an oil stock. In fact, many of the midstream companies that we have almost no exposure or very little exposure to the oil pipelines. And in fact, they transport natural gas. Interestingly, the price of natural gas over the past month is flat, and demand for natural gas has remained completely consistent, which means natural gas is flowing like crazy through the pipeline companies that we own. So Kinder has significant exposure to natural gas. They have reasonably small exposure by comparison, to oil. So what I'm looking at are companies that are misunderstood, where I think that we can make a lot of money to dig out of this hole, both in terms of dividend yield as well as capital appreciation from here, because they have all been thrown out and all painted with the oil brush. So, kind of work to our disadvantage on the way down, and hopefully it works to our advantage on the way up as the realization sets in that it's not just an oil stock. We've also been legging in, which you've seen. So like there have been multiple purchases of Navient, multiple purchases of Umpqua. And that has to do with pairing up the timing of what I want to sell and when I sell it, which frees up cash, and then what we want to buy and what percent I want to own it in at that point. What I know we've talked about over the last couple of weeks is that the portfolios will get smaller. If prior to this you were holding 37 companies in the equity income portfolio, going forward you'll probably hold about 30 or 32. And so that's part of this concentrating, but being very, very, very conscious to pair up the timing of the sale based on, like I want to sell GM, but I know it's going to be up. So I'm going to wait for that. Once that cash is freed up, then we can increase these companies. So that's why that's happening. Okay, I'm just going to check email for any more questions, and then I will open up the phone lines. Nope. No email questions. So if anyone has questions, please just, click the unmute button or hit *6 on your phone. And please don't be shy. Please do feel free to ask questions. We love them. So go to, enjoy. I'll take you all off of mute if you need me to. Anybody? All right, I'm gonna mute everyone just in case. Okay, everyone's unmuted. Anyone got a question since you're unmuted?
Thanks for the rally.
What's that? About the rally?
Rally.
I know, you all probably just want me to get back to work, right? Okay,
I
any
have
questions?
a question.
Sure.
Tracy.
Hi.
Hi. So I'm not sure why people think if this doesn't come roaring back in the fall, this is not going to be even more catastrophic for us business-wise, because I think if some of these small businesses open and have to shut again, it's going to be the end of them. And from what Dr. Fauci was saying yesterday, he said he's not even sure it's going to really go away in the summer. We're doing tons of testing in Rhode Island, and every day our figures are still going up for people infected. So I think there is more of this out there because lots of states aren't testing very well. So I don't know why people think this is going away.
Okay, so I just want to tell everyone something, and I hope you don't mind me doing this, Tracy. But if anyone who's participated regularly wonders why Tracy asks such shrewd questions. It's because she's an investigative journalist. So, so I always quake in my boots a little because I know we're going straight to the heart of the matter when Tracy asks the question. I don't think it's going straight away. And I don't think that's the presumption that anybody's making. And Greg, chime in too. In fact, I'm just going to stick it back on mute for background noise. So here we go. But Greg, please chime in also. So I don't think the presumption that is that it's going away, but I don't think that it's going to be more catastrophic because I think that there will be more measures in place. One of the things that we've talked about is there the wherewithal to do, if there need to be more bailouts or more funding in October, November, December, if it comes back and businesses need to shutter for a second time, could things like that be supportive? But I really think that there will be a different level of preparedness. And I think that that will help, buffer the pain. But I hear you, Tracy, on like the restaurant down the road. If they just had to close now for 2 months, will they be able to stand closing for another 2 months from, October to December? Greg, do you have thoughts that you want to add on that?
Yeah, well, I personally don't think there's any way the virus could come back in the fall worse than it did in January and February. The conditions in place in January and February will not be repeated. Just that we had complete, 99% of the country is completely oblivious to the virus spreading. People are unaware, practicing the practices of social distancing and washing hands frequently just weren't being done. And that, I think in the fall, that the virus will come back in the fall. There's an overwhelming amount of evidence that it will, but when it does come back, we should have, we'll still be practicing social distancing. I think wearing masks in public is going to be around for a while until there's a vaccine, which will not be available in the fall. But we're going to have, look at the progress we've had in the last 6 weeks. 6 weeks, we've gone from no testing in the country to now testing, 1.5 million tests per week, and with plans to increase that further. So by the fall, we should have several million tests available per week to identify hotspots a lot quicker, as opposed to in January where we just ignored it. We hoped that it wasn't spreading. So I think and then the other hope is that, I think that this was why there's such optimism today about the data on remdesivir. Remdesivir by itself is not a cure, but it shows that science can work in treating the virus. And I think that this is what we've gotten already in 2 months' time. There's more to come. And the summer, I think the talk is October is when the conditions will be really, really good for the virus to start to spread again. And by October, that's my math's right, 5 months away. We've got a lot of work to do in the meantime. But I don't think we're going to be surprised by the virus again. That's a one-time event. Yeah. I hope.
Yeah. One of the things that I've heard is in terms of the preparing for it. And by the way, I should say something else. Not just is Tracy an investigative journalist, she's a Pulitzer Prize-winning investigative journalist. So that's who's amongst your company right now. It's very exciting. But I've even heard that like restaurants are talking about putting up plastic sheeting between the booths. And I think that that's an interesting concept. It'd be so depressing for me to think about that. But if I think about going to the diner that I miss so much right now, maybe they could do that. They could put big plexiglass up, like they could create something so that maybe they don't need to close the same way they did. And so I do think that there will be the ability to get through it in a much healthier way, not only physically healthy, but economically healthy when it does pop back up. Okay, I'm gonna unmute. Okay, everyone's unmuted again. Other questions?
I guess I'm just still wondering about some of these major industries, though. I mean, everybody's scared to travel. Mm-hmm. Nobody's going to be getting on airplanes to do international travel, long distance national travel, unless it's an emergency. Right. Restaurants, people are dying to go out, but I don't think they want to eat that way. Mm-hmm. So I'm just wondering about like some of these major industries. I mean, yeah. If this comes back, I mean, you don't think it's going to be as bad as it is now?
I don't think it even matters if it comes back with respect to travel and, an airplane and resorts. I think whether it comes back or not, I think there's a different sensibility. And I think those are going to impacted for a really, really long time until there's a vaccine. Like, I'm personally not going to the movies until there's a vaccine. Here, I'm just going to mute everyone and get the background noise. But I'm not going to the movies, and I think that those will be really negatively impacted. But I think that we'll see other areas of the economy maybe pop up in ways that we didn't. And this is pure speculation on my part, but I am totally convinced that the road trip is going to make a resurgence. And maybe like the rental of the mobile home or the motor home, whatever you call them, maybe that turns out to be the way people travel this summer. I'm also really convinced that, well, I've been very convinced that we're going to see a major baby boom going into next year, which is generally is economically stimulative. I also am starting to think we're going to see a huge divorce boom too, which that would be good for lawyers, but not good for society. So I think that we'll see things come back in different ways. But no, I think you're right, Tracy. I think airline travel and hotels travel and resort travel, those are going to take a long, and movies are going to take, and Broadway, that's going to take a long time. That's going to take until there's a functional vaccine and people feel safe. But that's not to say that it won't be significantly better than it is today. And I think that's one of the things that we're seeing is you can look out and say, okay, here's what the expectations for 2021 earnings are. Nobody knows at a company by company level. But what you can say is it will be better than it is today. And I think that part is undeniable. And at least with earnings coming out, we're starting to know what today actually even is. Yeah, it's going to be tough. And I know someone else on the call is a huge fan of Broadway. So saying that Broadway is going to be closed maybe into 2021 is pretty heartbreaking. Okay, who else might have questions?
Not me.
Okay.
Thank you, Jenny.
Thank you
Thank
so
you.
much.
Very
Thank you,
good.
Jenny. Thank you.
We
Thank you.
appreciate all of you so much. Thanks everyone. We'll see you next week.
See you next
Hang
week.
in there.
Bye, guys.
Bye-bye. Be safe.
Thank you. Bye,
Thanks,
everybody.
Jenny. Thanks, Greg.
Bye.
Bye.